Hi, I'm Debi Peverill, and you're listening to the weekly tip from painlessfinanciallearning.ca. Today I'm reminding people about the September 15th personal tax installment deadline. What happens is surprises Canadian taxpayers sometimes when they get an invoice in the mail when they haven't filed a tax return showing that they've got an unpaid balance. So the way it works is if you owe CRA more than $3,000 on your personal tax return 2 years in a row, then they want their money up front. Because it takes some time to process personal tax returns, they will ask for half of the money they're looking for on September 15th and the other half on December 15th of the year that follows the year in which you created this liability. So here's the example. You filed your 2015 tax return in April. You owed $5,000, which you paid. In 2014, you owed money too, for the purposes of this example. So for September 15th, you will get an invoice for $2,500, being half of the amount that was outstanding on your personal return. At this point, people generally call their accountants and say, why am I getting a bill for money when I paid that entire amount at the end of last year? And the reason for that is that CRA wants their money up front. When you owe that much money, when you file your personal return, they want the money up front the next year. So you're required to make installments. What if you don't? Well, if you don't make the installment and you don't owe the money, it's not a problem. If you don't make the installment and you do owe the money, well, then they're going to charge you installment interest. We have a form on Peverill.ca which shows you what will happen in those 4 different scenarios. So refer to that to make your decision. But my general advice is when CRA asks you for money, you should send it to them.